Good Thursday morning, and thanks for joining us from the Ohio AgNet Voice You Know with the News You Trust studio, sponsored by Grain Equipment Company, where innovation meets execution. I'm Dusty Sonnenberg. Under partly cloudy skies, we have 46 degrees on the barn thermometer. Now it's supposed to clear off and be a sunny day the next couple days, but a little bit cooler than we've seen lately. However, compared to what the average temperature is, still very pleasant for this time of the year. This quick calendar reminder, be sure to tune in at midday today as we'll be taking the Ohio Field Leader Roadshow to the farm of Todd Hesterman up in Henry County. The Ohio Field Leader is a project of the Ohio Soybean Council and your soybean checkoff. Let's check in now with our weekly update from the Ohio Soybean Council, and joining us today is Steve Reinhardt. Steve, an Ohio farmer, also currently chairman of the United Soybean Board, and Steve tells us a little bit about the work of the board as they handle those checkoff funds.
Our vision is to partner to deliver sustainable soy solutions to every life every day, and we have different ways that we can do that through our meal markets, our oil markets, other things like that. And again, one of the things that we're really keyed on doing is looking at how we can return money or maximize that profit opportunity for all U.S. soybean farmers. And we do that by looking, beyond the bushel. So as we look at that soybean, when we talk about that whole soybean, we want to talk about food and fuel. So, we're looking at basically 80% of that soybean is composed of the meal. And then we have the other 20% is composed of the oil. And as we look at that, how that's broken down, the meal portion, which our number one customer is still animal agriculture, they consume about 97% of that meal. And that's a way that we're going to add value to the soybean. We produce the meal for the animals to consume, and it creates a greater value for us. And then we have about 3% of that goes into food products. Some of those products are basically used for, protein alternatives, and soy milk would be an example then also of that meal component. As we look at the oil components, 61% of our oil usage goes into food production. The high oleic soybean oil, that's another advantage that we have in the food space, so we can continue to make a healthy product for our consumers to use. And then about 31% of that goes into biodiesel and bioheat.
Great information. Again, our guest today, Steve Reinhardt, chairman of the United Soybean Board, and this brought to us by the Ohio Soybean Council and your soybean checkoff. Let's check in now on your Thursday morning weather forecast, brought to us by Seed Consultants. Simply better performance. Online at seedconsultants.com.
Dry weather in here to finish this week, but we have a couple more weather systems trying to bring moisture through the 10-day forecast. I'm Chief Meteorologist Ryan Martin. Let's take a quick look at that Ohio forecast update. Once again, today, tomorrow, Saturday, nothing going on here. We should see sunny skies and temperatures that are not too shabby, all things considered, above normal easily for this time of year. Our next round of hit and miss moisture tries to come in on Sunday. Showers and maybe even a few thunderstorms. Thunderstorms seem to want to be centered down in southwestern parts of Ohio if they do anything. And I think we're going to be looking at anywhere from a quarter to 1 inch of rain with coverage at around 80% of the state. Decent precipitation totals through Sunday. We dry down by Monday morning. We stay dry Monday afternoon, Tuesday, and into early Wednesday. Wednesday afternoon through early Thursday, we have a frontal boundary coming through, bringing another quarter to 3/4 of an inch with 100% coverage. Behind that front, we were looking for cold air to come in. I still think we are a bit cooler, but the bitter cold surge does not look like it's going to be able to happen. Definitely not coming as far south. So I'm looking for us to be sunny for next Thursday, Friday, and Saturday. I think we're cooler for Thursday, but then right back to our standard 10 to 12 degrees above normal temperature zone through Friday, Saturday, and even into Sunday. Cold air may hold off until later in the week of the 18th to try and make another run south. I'm meteorologist Ryan Martin.
Thanks, Ryan. Stay tuned. We'll be back with more after this.
For farmers, it can be a challenge to navigate life from time to time, and agriculture can magnify those moments. Hi, I am Nathan Brown, a Highland County farmer and a member of the Ohio Farm Bureau Board of Trustees. Farmers, you are not alone. Help is available if you're dealing with stresses of farming. If you or someone you know is struggling with stress, text 4HOPE to 741-741 or visit go.osu.edu/agcrisis. A message from the Ohio Farm Bureau Federation.
Taking a look at your agricultural headlines, the USDA is looking to revise some numbers with harvest over 90% complete and the latest WASDE report set to release this coming Friday. Now, USDA's November crop estimates tend to add increased accuracy to the U.S. production estimates, and 2024 should be no exception. U.S. corn and soybean harvest are both over 90% complete now, allowing for a more complete view of field data from which the USDA can work to formulate its estimates. As we said, that latest WASDE report, then World Ag Supply and Demand Estimates, comes out this Friday afternoon, and they will be looking as the December WASDE report does not feature supply adjustments to the U.S. crops. So corn futures enjoyed a decent boost through the second half of October, and thus far have managed to recapture just over 50% of the value lost from harvest sell-off during the first half of October. Corn harvest is now seen at 91% complete for the major U.S. producing states, and in October, the USDA estimated the 2024 U.S. corn production at 15.203 billion bushels. That would be the second largest production on record behind last fall. This is behind a record estimate yield of 183.8 bushels per acre. And for this Friday's report, the 19 analysts surveyed by Dow Jones expect a slight cut in U.S. corn production on lower harvested acres and a slightly lower but still record high yield. Now, all told, the average analyst production estimate would be 15.179 billion bushels. We still stand as the second highest on record. Looking back at the WASDE report since 2004, the 8 years when the USDA raised production from September to October corresponded with 4 years of additional increases in the November report and 4 years of subsequent cuts in November releases. It is worth noting that the years of increase between October and November reports also corresponded with increasingly good crop condition ratings through September and October. In the two instances of declining or steady ratings, production estimates dropped and crop conditions for this fall held steady from pre-September report levels through the final ratings from USDA. Now, where things will get interesting is factoring in the extremely strong demand for corn that really solidified itself through October. Corn export commitments are now running 38% above the USDA's estimated pace, and while they don't expect any huge leaps in estimates from the USDA, they do believe we will see some sort of acknowledgement of the export performance in Friday's figures. Dow Jones Surveys analysts agreed with the average estimate for the 24-25 ending stocks, coming in at that 1.921 billion bushels, which would be down 78 million bushels from the October estimate. And as for the beginning stocks, they don't believe there's room for reduction in the 23-24 carryout, particularly on the higher demand for that season. It's probably not enough to significantly move the needle, but it is worth noting nonetheless. Now, on the world balance sheet, the Dow Jones survey is calling for a slight reduction in corn ending stocks from the 306.5 million metric tons to 305.9. This is partially due to analysts also predicting slightly tighter beginning stocks, down 200,000 metric tons from October. Now, in mid-October, Brazilian agency CONAB released its first estimate of the Brazilian production, saying the country would produce 119.7 million metric tons of corn. USDA is currently estimating Brazilian production at 127 million metric tons. Although it is likely to be too early to see a significant cut from USDA, the gap in estimates would be worth keeping an eye on, especially as we turn the calendar from 2024 to 2025. Now, as far as soybeans go, the USDA estimates the 2024 U.S. soybean production in October at a record 4.582 billion bushels, stemming from a record yield of 53.1 bushels per acre. And Dow Jones survey shows analysts are slightly less confident of U.S. production, with the average estimate calling for a 0.3 bushel per acre cut in yield and a subsequent production cut of 4.553 billion bushels. Both these estimates would still stand as records, though, for the U.S. The U.S. soybean crop did experience some late growing season weather stress in the last part of August and September, but it remains to be seen how that translated to potential yield loss. All clues thus far point towards it having minor consequences. The USDA did slightly trim the good to excellent ratings for the crop through the month of September by 2 points total. Looking at the WASDE history since 2004, the USDA has cut production from September to October 10 different times, not including this year. And of those 10 years, the USDA has subsequently raised production in November only 3 times. Now, the instances of production increases also correlated slightly with steadily to improved crop conditions through the early fall. The demand picture for soybeans is also strong, with exports now running slightly above the USDA's pace after a good October allowed commitments to catch up. And according to the Dow Jones survey analyst, expect a slight cut of 15 million bushels to the U.S. ending stocks. Like corn, they also see room for increases in the old crop 23-24 demand figures, particularly in regard to soy crush, which could turn lower to the carry-in for the 24-25 year. Now, on the world balance sheet, analysts expect soybean ending stocks to decrease slightly from 134.7 million metric tons to 134 even in November. In its first season estimate on the October 15th, Brazilian agency CONAB estimated soybean production at 166.1 million metric tons. That is below the USDA's estimate of 169, but still a record production for Brazil. And weather in South America has been very good recently. After a very dry start to the planting season, soybean planting pace skyrocketed the last 2 weeks of October and now stands at a normal level. Now, in terms of wheat, Friday's report will likely be a quiet one in regard to wheat, as although great attention is being given to the winter wheat conditions in the Northern Hemisphere, USDA will not release those balance sheets until May of 2025. The 2024 U.S. wheat production is likely solidified as the small grain summary in late September, and the demand situation for U.S. wheat has been friendly with export book running, with the export book running 19% above 2023. USDA has already taken into account increased export demand for U.S. wheat, and while there's a chance it could increase the figure again in this Friday's report, the gap isn't a widely significant one currently, and Dow Jones survey has an analyst calling for the U.S. wheat ending stocks to go unchanged in Friday's report at 812 million bushel, with a report range of 800 to 830 million bushel. Stay tuned, we'll be back to take a look at your markets after this. Those long days in a tractor cab can really put a cramp in your body. So while refueling or refilling your equipment, walk around the tractor a few times, or do a few head-to-toe stretching exercises. When fatigue does set in, that's when injuries and mistakes happen. Know when it's time to take a break and recharge. Let's make sure everyone gets home safe and sound. This message from the Ohio AgNet, OSU Extension, Ag Safety and Health Team, and this station. It's time now for your morning Louis Dreyfus grain analysis, brought to you by the Ohio Soybean Council and your soybean checkoff. Let's check in with Ryan Martin.
Grain markets finished mixed on a Wednesday. The aftermath of the U.S. election was interesting. There was a little bit of trade sharply to the negative side, and overnight, at one point, beans were down over 20 cents. But day trade opened, and we saw the markets claw their way back. At the end of the day, corn up 6 to 7. There are some expectations of a fairly large number in the weekly export sales report today. We'll get to that in a little bit. Beans were back to nearly unchanged, actually a couple pennies higher on the January contract. Wheat was down in Chicago, KC, and Minneapolis markets, but well off of the lows. Before we go any farther on the grain side, we need to point out that the outside markets were supportive. Dow futures were up over 1,500, almost 1,600 points. It was a very strong day on the macro side. Meanwhile, energy markets, crude oil was down about 30 cents. Gas and diesel a little bit lower. Soft markets were down due to some of the election or post-election trade. Meat markets were a little bit higher. Now, back to the grains overall. There was worry on trade from the second Trump term that is on the way. However, initial selling faded as Inauguration Day is in January, so there's plenty of time to see what is or is not going to happen. U.S. grain importers are very anxious regarding nearby shipments out of the U.S., wanting to avoid any potential new tariffs. They need spot grain for domestic processing, and exporters are placing bids under the Board of Trade. However, long-term issues of South American weather and slowing Chinese demand for ag products have not changed. That is going to be something that ultimately hamstrings this market one way or the other. For the first time in several weeks, no new daily flash sales yesterday for corn or beans or anything. It's been very active on that front since back late September. I'm Ryan Martin.
Thanks, Ryan. Let's take a look at how your markets closed, brought to us by Seed Consultants. Simply better performance online at seedconsultants.com. December corn closed up 7 3/4 cents and March corn was up 7. January soybeans closed up 2 cents with March beans unchanged, and December Kansas City wheat closed down 2 3/4 cents while December Chicago wheat was up 3/4 cent and December Minneapolis wheat was up 4 3/4. Now in the overnight trade, December corn is trading down 1/4 penny at $4.26. November soybeans up 2 1/2 cents at $9.97, and wheat for December down 1/2 penny at $5.72 3/4. Thanks for joining us. I'm Dusty Sonnenberg. This is the Ohio AgNet.